Hi everyone, welcome back to this week's Swyftx Squawk, the first one for 2026. Hope you all had a lovely Christmas, a lovely new year. I know I did, but I'm ready to get cracking in because the market's giving us quite a bit to talk about. We have seen crypto markets really start off 2026 with a bang. Many of the altcoins out there showing double-digit gains, even Bitcoin itself boasting some really impressive rallies, which have seemed to simmer over the last 24 hours. So it's really got us thinking, is this a bit of a move in the market that we can rely on, or is this more of just a flash in the pan and we could expect potentially some lower prices in the coming days and weeks? And obviously we don't have a crystal ball, we don't know, but what we can do is look at some of the data points that we usually track to just understand what is the market structure at the moment, who is participating to drive a little bit of this potential pressure reliever in the markets. And one of the key themes that we spoke about all of last year and even the year before was the impact that ETFs have made on the demand for Bitcoin specifically. So we're talking about spot ETFs here on Bitcoin in the US, and we can see that this particular chart, it breaks up essentially month by month. What were the net flows? So what was there net buying, net selling, month on month? And we could see during November and December last year, was obviously quite a bit of despair in the market. We saw prices drop circa 20%. We also saw about just above $4 billion US dollars leave the crypto ETFs as well as an aggregate. So that's specifically just Bitcoin. But in January, we've seen those flows turn positive again. So you could potentially infer that from this, that we have seen that reduce slowdown from an institutional front, that market structure there for a bid or an ask heading into December, and even flip positive to start the year. So there's obviously maybe a little bit positivity and sentiment coming in there. You know, why this may be the case, we're still yet to see. We still have key macro data points coming in all the way into the end of January regarding jobs and even the likes of the next interest rate meeting, which has got everyone's ears and eyes glued to that just at the moment with the interest rate drop that we did see at the back end of last year. But obviously, we're just wondering, again, is this the market getting risk on? Is this just a decompressing of what potentially could have been a bit of an oversold market? And we spoke about this particular chart last year, and I thought this is a very fitting time to just come back, revisit it. It's Stablecoin Dominance. So again, just to recap on that, for those that missed it last year, this particular chart describes what is the market sentiment towards being risk on into crypto assets themselves, being exposed to the fluctuations and the ebbs and flows in market prices, versus just sitting in something a little bit more stable, USDT and USDC, looking at those two right here. So we're adding those and looking up how much of the total percentage money that's currently sitting in crypto is sitting in these stable coins. And back at the end of last year, this chart was rising. Ever since Christmas Eve, we've seen this nice little downtrend in the dominance of stable coins of the total capital that's on the market. So this could tell us that from a short-term perspective, at least, that while the overall trend may be potentially pointed to the upside, we are seeing a little bit of a shift here. And obviously what we're looking to understand here is this a reversal, or is this just a potential continuation of the overall trend? And when we look at the highs that Stablecoin Dominance got in 2023, it was about just over 14% there. The lows were just around 5% there. We're almost at that midpoint there. It's not so much that these levels have significance and that we're going to be drawn to them. It's if we're just trying to understand from a market's perspective of mean reversion going from extremes, what does the middle look like? The middle looks about anywhere from 9 to 10%. There's potentially an argument you could say that from a complete stablecoin market structure analysis perspective that we could see this trend resume. But obviously, if we see this trend start to turn over and reverse, that sets up a pretty positive narrative similar to what we have seen at the back end of what we've got there, 2023, for maybe some duration to a market rally, the way that we saw just after July in 2024, the same way we just saw after Q2 in 2025 as well. We'll have to wait and see, but it's just to call out that this Q4 period that we did see, again, just a hallmark of how sharp that correction was. It was very steep, the de-risking in the market at that stage. So again, we're looking to understand what's gonna make the market want to feel comfortable back into crypto assets and moving out of these stable coins. I think a lot of this is going to come down to what's happening politically right now. There's obviously quite a few fireworks happening abroad. So again, this again in isolation isn't going to tell us what's going to happen next, but it's going to help us understand relative to the past, what is the market doing when it comes to being risk on or risk off? And I think this is a really important chart to watch over the coming weeks, over the coming months. But that's it from me here at Swyftx. I'll be back again next week. We'll touch on some other key metrics and how they're moving in the market. But until then, and catch you later.